I'm LaDonna Lockard, and this is Max Combos. I'm here today with my favorite of favorite guests, Brandon Christensen. Brandon, how are you?
I'm doing great. Thanks for having me on again. This is always a treat.
Yes, it is my pleasure every single time. I wanted to have you back. It's the first part of the month. There
hmm
have been so many changes and little, when I say the word little, I'm obviously mean huge mergers and acquisitions
Yeah.
that I wanted to have you here because I feel like who better to talk to about what's going on right now and why it's relevant to the origination landscape. Let's
Yep.
jump into it. What are you seeing? What are your thoughts?
Well, I mean, there's a lot going on, right? So I don't know that we'll be able to tackle it all in this conversation, but let's try and list them off. How about that, LaDonna? Let's
I
list
like
off
it.
what's happened just in the last 10 days. Now, disclaimer, you can't hold us responsible for missing one of them because there's been so many, right?
Right.
So the first thing I remember hearing about is Freddie Mac's return to work mandate, and the workforce, the top executives, a couple of them got axed over at Freddie Mac. That was kind of the first the dam that broke, and then we saw a bunch of updates from FHFA. We saw some updates from HUD. What did they update? Well, things that had been put into place in the prior administration. FHA specifically rescinded the reconsideration of value update that they made middle to the end of last year, and a few other things. We saw some updates to who can qualify for FHA loans when it comes to residency status. So a lot of moving and shaking going on in the industry. And of course, LaDonna, you mentioned it, some acquisitions, right? Rocket Mortgage has been pretty active in the mortgage landscape with their acquisition of Redfin and then their acquisition of Mr. Cooper. All that's really interesting and exciting. And we could probably talk about all of those things separately for a long amount of time. You know what's really interesting to me right now, LaDonna?
Tell me. Tell me.
There's rumblings. Some of you that are in social media and are present on the different platforms out there have seen some graphics that have been posted recently about foreclosure rates and delinquencies and things of that nature. And some of it's been debunked if you actually look between the lines and kind of see what's really going on. But here's some data that I came across that's actually published by HUD that I think for loan officers watching this conversation, LaDonna, is super timely and opportunistic. The data that was published by HUD was that 30% of all FHA loans have a debt to income ratio that exceeds 50%. So just let that
Okay.
sink in for a second. We're already at delinquency rates on FHA loans somewhere in the neighborhood of 10 to 12%. So what does
Wow.
that really mean, and how does that translate to a loan officer listening to us today? Well, in a market where we're always looking for additional opportunities, additional at bats, I would look hyper vigilantly at my FHA borrowers that I've closed over the last 2 or 3 years, because the data is showing us that they're struggling right now and they need help. And we have opportunities to help them. There's many different products and solutions. And yeah, the low hanging fruit is the FHA Streamline Refinance. You closed your FHA loan at 7.5%, whatever it was. Let's do a streamline. But that doesn't really help their bottom line. Because one thing we know about borrowers and just people in general is old habits die hard. So what happened when these borrowers closed on their FHA loans at 50+% on their debt to income ratio a year and a half, 2, 3 years ago? They've now acquired even more debt. So really
Mhm.
their debt to income ratio is probably much higher than what we're seeing in the data. So they need help. They need our help. And as loan officers, we're uniquely qualified to present help in the form of a mortgage solution to help ease the burden a little bit for them so that they don't lose their home and they don't experience that hardship. I think it's a great opportunity to be exploring right now in the midst of all this other chaos that's going on.
I think that's definitely a bright spot. And so I appreciate the perspective of how people can approach this to try to help consumers that maybe have found themselves struggling with quite a bit more debt. We know that people are struggling.
Yeah.
Inflation is still really high. The cost of goods is still really high. Wages have not kept up with the
Mm-mm.
amount of growth that we've seen. So we know that people are struggling. And
And here come the tariffs too, right?
let's not forget that. Let's not forget that. So now really is an opportunistic time to reach out and to try to help them. I wanted to get into, well, let's just do it really quickly
Okay.
because we're
As fast as
almost
we
out of
can.
time already. Yes. I want to talk about the pullbacks that certain people are able to qualify for, given the rollbacks of DACA recipients, et cetera,
Yeah.
people who are no longer able to qualify. Tell me from an origination point,
Mm-hmm.
and I want to try to, do my best. Well, no, you know what? Forget it. From a mortgage advocacy perspective, I don't love these changes, and I
Right.
know that I'm not the only one. And I want to make sure that we're vocal about it because we, as an industry, have that responsibility to let our voices be heard. But how are you, as an originator, trying to help people who maybe, a month ago could have qualified and now can't?
Right. Just because of that simple rule change. Well,
Correct.
I think the first thing that I would say, and this probably rings true for anybody that's a business owner or an entrepreneur, is you got to focus on controlling what you can control to some degree. Like the changes that are being made at the upper levels of the mortgage industry, for most originators, there's not a lot that you can do boots on the ground, right? Now, you can always speak up and you can share your voice, you can share your opinion through the various advocacy groups that exist in our industry. And I would encourage that you do that. But in the meantime, I would also explore additional options and solutions that exist in the marketplace. Now, just because FHA came out and said you can't do this anymore in this certain way for this certain borrower, doesn't mean that there doesn't exist another product out there in the marketplace that could potentially be a solution for that borrower. Sure. So now more than ever, and I feel like I've been saying this for the last 2 years now, you got to be an expert. And
Yeah.
you've got to be well versed in the products that are out there. And I do expect that as a lot of these changes take place, we will probably see more private money enter the mortgage space to kind of fill in the gaps that either the FHA is leaving wide open or the FHA in this case is leaving open. So again, it's an exciting time to be an originator because you can really separate yourself from your competition purely based on the amount of knowledge and skill that you have at this craft.
You're the best. Thank you for that. We're going to jump over. Let's go Take It to the Max. This is going to be your first time in the official format of Take It to the Max. So I'm so excited. We're going to go unpack everything that we didn't have time to unpack here. Brandon, as always, you're the greatest.
Thank you.
For Max Combos, I'm LaDonna Lockard.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.